Hello, everyone. Good morning. Thanks for joining us on this Saturday morning, and welcome to this educational presentation where I'm going to be asking actually you the question, is the overall direction of the market about to change? Now, this is probably one of the most common questions I get from prospective students to actual students. I say, well, Steve, what do you think of the market? And we're really at a point now where you should be at the point where you should be saying to yourself, well, I don't need any information because I have all the tools and techniques I need to answer that question for myself. So in today's presentation, I'll actually share with you a very powerful but simple tool so that you can answer for yourself if the overall direction of the market is about to change or already has. Now, as an example, let's look at this older chart here in the Dow. This is going back a year or so when the Dow was steadily heading higher, similar to the way it is right now. We're just so slow, and really it looks as if nothing is happening. Every once in a while, you'll get these nice, slow upward moves, and then you get a week or two of downward action where we make new lows, but then it's quickly recovering and starts to make new highs again. Extremely slow, but the market is in no way telling you or giving you any clues as to starting a new downward direction. Now, this was in February of 2020. So the market was still steadily going higher until this happened right here. Now, someone could say, well, Steve, sure, we had a kind of severe sell-off, but that's no different from what happened here, just a little stronger, and then we recovered. But there was a clue that the market was giving us right here that most likely it was about to change direction. And we all know what happened at the end of February and coming into March into the market. So that was a little over a year ago. Let's look at the Dow right now. It's been steadily going higher the way it was previously. And sure, you'll have these sell-offs like right here where you make new lows where we did there, and then even right here where we made new lows, but then it quickly recovers. So the market, for all intents and purposes, is very similar to what was happening before. It's still strong and heading higher. But look what happened this past week or so. It gave us the same exact clue that it had given us in 2020. So we asked the question, and that's what we're going to be answering today. In fact, you will answer it. Is the overall direction of the market about to change? Now, here's the best news about this class today, because you'll be able to answer this for yourself simply by applying the PTS Primo Charting Platform, the educational platform that actually teaches you how to trade and will help you answer the question as to any market, regardless of Bitcoin, currency pairs, futures, commodities, or the stock market, whatever indice you're looking at, is about to change direction or stay in the same one. So this is going to be a great educational presentation today. Thanks for joining us. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, we only have one goal with all of our courses, with all of our classes, and that's simply to teach you how to trade. And the reason why most traders have difficulty learning how to trade is because we've never really been taught that concept before. We're always taught to simply go to a trading room or a chat room or to buy some $10,000 system that spits out automatically buy or sell. So basically, we're always taught to take ourselves out of the game. And ultimately, that really doesn't work because we know that 80 to 85% of all traders fail. So one of the main causes of this is because you're taking yourself out of the game and not relying on making your own trading decisions. And most students say, well, Steve, I don't have enough experience like you. I haven't been trading for 44 years like you. I didn't start my career on the floor of the Pacific Stock Exchange, so I just don't have the expertise, the knowledge. So I'd rather follow someone who's a so-called guru. Remember, this is the way the entire industry is based on. But if that works so well, then once again, why do 80 to 85% of all traders fail? It's simply because that doesn't work. No two traders should ever trade alike. So the service we provide is we teach you all the things that have high levels of consistency so that ultimately you don't have to rely on anyone or anything else. You can make your own trading decisions. And you're going to see that today. I'm going to share with you this tool so that you can actually answer the question, is the market about to change its direction? Okay. Now, before we begin, we are always required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this simple tool. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are first and foremost an educational company, that all examples are strictly for educational purposes only. Since our only goal is to educate traders, we also have a service so that you can be educated on a daily basis, and that is simply Twitter. We have a Twitter page. There's our handle right there. So please feel free to follow us on a daily basis. I'll post anywhere from signals that our strategies have generated and go into a little brief explanation as to why. Also, I'll share with you some little bits of financial wisdom to help you along your way. So lots of great free education on a daily basis. Please feel free to follow us on Twitter. So once again, as I mentioned in the opening statements, we are different from other webinars. I'm not going to tell you what I think the market's going to do, because even though the title of today's presentation is a question, I'm going to let you answer that. And you'll be able to answer that in just about the next 15 or 20 minutes after you learn how to use this tool. Our sole purpose is to educate you so that you can ultimately make your own trading decisions. So as you can see here, my goal is not to force feed you signals, not to tell you what the perfect market is or the perfect time frame, and certainly not to tell you what I think the market's going to do. My goal is simply to teach you these things so that you can ultimately make your own trading decisions. That's what we call the specialist edge. Now, traders who have the specialist edge don't just have a good couple of months or maybe even a good year. They're able to make their own trading decisions and be consistent for decades. And that's what we're trying to instill in all of our students around the world in over 115 countries and in every state in the United States. So we are, once again, first and foremost, an educational company. And since we are focused on teaching you, I want you to ask me as many questions as possible, but please wait till the very end. I know a lot of webinars, they ask questions for every slide, and that's fine, but I don't want to take all of your Saturday morning. And many times, if you just wait for the next slide, your question is answered. So if you do have a question that you feel wasn't answered, please write it down or try to remember it. And I promise I shall get to it at the very end. Now, all of our webinars are recorded. So if you happen to have a question later on and you say, oh gosh, I missed it, I didn't ask him that question while it was live, don't worry. You can watch the recording, and many times your question will be answered by watching the recording. So we'll send you a link to that right after today's presentation. Okay, so without further ado, let's begin today's educational presentation. Now, what if I told you that there was a tool that was designed to automatically put you in sync with the market direction? Whatever market you're looking at, the Dow, Bitcoin, commodities, it could tell you in an instant what the overall market direction is. Now, before you say, oh, okay, this is going to be a sales job, I have to spend $10,000 on this real expensive tool that does this. No, there is actually the tool that does this, and you have access to it right now. You don't have to pay anything for it. You've just never been taught the proper way to apply it. That tool is the buy-sell line. We call it the buy-sell line because it tells you whether you should be a buyer or a seller. It's not a strategy. It does not automatically generate signals, does not tell you where to buy, where to sell, where to place your stop, how many shares or how many contracts to buy. No, that's a strategy. All this tool does is tell you whether you should have a buyer's perspective or a seller's perspective. Now, before you, once again, start thinking, okay, well, gosh, I'm not very good with these really intricate indicators, don't worry. You have access to this right now, and it's the 50-period simple moving average. Now, many of you probably have this already plotted on your screens right now. If you're not a student of mine, most of you will have this plotted, but you don't know the proper way to apply it. So let's go over the rules. In order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade, and that is, where is price in relation to the buy-sell line? All right, I'll say that again. You always have to ask yourself that question before you pull the trigger, and that is, where is price in relation to the buy-sell line? Or, in other words, the 50-period simple moving average. For example, we're not talking about strategies today. So you could be using one of your strategies to be coming from another teacher, another website. It doesn't matter today. But if that strategy, whatever it's based off, could be based off fundamental news, could be based off indicators, could be based off astrology, makes no difference. If it generates a buy signal, you want to ask yourself, firstly, where is price, where is this buy signal being generated in relation to the buy-sell line? And you're only going to come up with two possible scenarios, because if price is above, then you should only have a buyer's bias or a buyer's perspective. That means any signals you get should be from a buyer's point of view. You shouldn't be selling if price is above. And conversely, if price is below, then you should only have a seller's bias or a seller's perspective. You should never be buying below the 50. Now, does this guarantee that every trade is going to be a winner? No. Sometimes there are some phenomenal buy signals of whatever strategy you're looking at below the 50 period, simple moving average. And sometimes there are some amazing sell signals that are above the 50 period moving average. But guess what? Those are very short-lived. In other words, we're trying to make you a consistent trader. And consistency is not about hitting home runs, because I'm sure you can go back and look and say, wow, I would have missed this if I had listened to this buy-sell line rule. But remember, we're trying to make you consistent. And over time, if you use this simple rule of buying above and selling below the 50-period moving average, you will become consistent. Sure, you may have missed a home run here or there and say, gosh, I wish I would have bought that, but Steve said not to buy it below the 50. Sure, and maybe you would have had a really great trade and made a ton of money. But most likely, if you continue to apply that approach, you'd give it all back. And a month later, it'd all be gone, and you say, wow, I wish I would have stuck to that rule, because even though I wouldn't have gotten that big winner, at least I would have been consistent and had a lot of other small little winners. That's what trading is all about. Remember, we're not promising you the world. We're not a type of website that says you will be rich in 30 days or you'll be retiring by the end of the year. If anyone says that, I would run. We don't believe in that. We're just trying to teach you how to take charge of your own trading so that you become consistent for the very first time. And this is the most basic of all rules. I use this in my own personal trading on a day-to-day basis. All right, but let me first share with you how most traders decide the market direction. And this can be the market direction of a stock, a future, currency pair, or an indice. Let's start out by looking at a stock first. These are just older charts for educational purposes. All right, this is UI. Now, most traders looking at this chart would say, well, Steve, it looks pretty good. I mean, it's making higher highs, higher lows, and I've always been taught that that's the definition of an uptrend. So if we're in an uptrend, you say you should buy, right? So I like this, so I'm going to look for some buy signals, but then all of a sudden this happens. Kind of hits a wall, right? So you say to yourself, well, you know what? I took that $5,000 class on the institutions, and they say that there's major resistance here because that's where they're all selling. So I don't want to go against the institutions. So on top of that, that $10,000 course I took on candlesticks says that there's a bearish engulfing pattern right here, followed by another one. That's two signs of a real negative market. And on top of that, we're making lower highs and lower lows. So right now, we've hit some resistance and we're in a full-fledged downtrend. So after all that analysis, what you determine is that the market is going lower. If the market's going lower, then obviously you want to sell, right? Okay, so let's see how well all this analysis turned out. Okay, this is why most traders fail. Do you realize that all of my justification for determining this analysis was based on someone or something else's determination of the market? Old traditional wisdom type of techniques that really show no levels of consistency. They're not doing the first thing that we taught you, and that is to apply the buy-sell line. So let's go through this process again, but this time we're going to be applying the buy-sell line, okay? All right, so we look at the chart where we obviously would have lost a lot of money, but on our platform, we make it simple. In the top left-hand corner, you would just first thing, before you decide to pull the trigger, remember, it's okay whatever strategy you're using, whatever analysis, but before you pull that trigger, click on buy-sell line, and in the drop-down menu, you'll see 4 different options. Click on 50-period simple moving average. Once it's plotted, you ask yourself that question I told you to always ask yourself, and that is, where is price in relation to the buy-sell line? Obviously, price was above, right? So if price is above, are we going to be a seller? No, we're not ever going to sell above the 50. Remember, it's a numbers game. And therefore, you would not have lost. And what happened to all the institutions? I thought they're never wrong, right? They always have this big money behind them. What happened to the higher highs, higher lows, and lower lows, lower highs? What happened to that? What happened to the candlestick patterns? You see, those things have very minimal levels of consistency. We're trying to teach you things that have high levels of consistency. Now remember, consistency does not mean that it works 100% of the time. Consistency just means that it's a 2 steps forward, 1 step back approach. It'll work a couple of times. One time it won't work. Work 2 or 3 more times. One time it won't work again. But you see, over time, you'll have this consistency in your trading. That's what will sustain you. Not some fly-by-night method that promises the world and every once in a while has a great home run, but then by the end of the month or 2 months later, you've given it all back. That's not what's going to sustain you. You want a 2 step forward, 1 step back approach. And the buy-sell line is the best thing I know of to instill that right off the bat. All right, here's another example, PINS, all right? Oh, it's been heading lower, but once again, you've been that student of institutions. You bought that $5,000 course and that indicator, and it says, this is major support here, Steve. They're all buying right here. I can't go against the big money, the big banks. They're always right? So your analysis is you want to be a buyer right there at the low. I mean, it's not going to go below where the institutions are buying it. After all, that $5,000 course can't be wrong, right? So you buy, and look what happens. What happened to the never losing institutions with all the big money? What happened to the major Fibonacci support? Okay. Remember, there's not a high level of consistency in those things. I know we've all been taught that, but guess what? I was taught that those things have high levels of consistency 44 years ago when I first started. And in my 44 years, I have found that they don't have high levels of consistency. We've really been sold things that are basically urban myths, all right? Let me share with you what has the highest level of consistency and the simplest thing you can start doing right now. Remember, we're not talking about strategies. All we're talking about is whether you should be a buyer and have a buyer's perspective or whether you should have a seller's perspective. That's all. Then you can apply whatever strategy you want accordingly. So first thing we do is click on the buy-sell line on our platform. In the drop-down menu, click on 50-period simple moving average. And now we ask ourselves that important question. Where is price in relation to the buy-sell line? Price is below. In fact, price has been below for a long time, even right here. So are we going to be a buyer if price is below the buy-sell line, regardless of what strategy we're trading? No, we're not. Now, every once in a while, you may get a great buy signal, as I've said. But remember, we're not trying to hit home runs. We're just, I always say this, but students don't realize it until they get their first big loss. If you buy below the 50-period moving average and sell above the 50-period moving average, it's like playing the slot machines in Las Vegas. They are designed to give you a winner every once in a while. And every once in a while, when you get those winners, you'll say to yourself, hey, see, I'm doing well. But that's just a false sense of security, because what they want to do is they want to keep you there because they know ultimately if you continue to play, you're going to give all your money back. And it's the same way with trading in the opposite direction of the buy-sell line. Sure, every once in a while you'll get a winner just like the slot machines, but it's designed to keep you doing that because ultimately if you keep trading the same way, you're pretty much going to give it all back. All right? Take it from someone who's been there. All right? I'm not teaching you these things out of arrogance or being condescending. That's the way I was taught to trade. And my first year or two trading 44 years ago, I did the same things that most likely many of you have been trained to do. And it didn't work at all. So it's my job as an educator to share that with you and say that there's really no consistency in these traditional things that we're taught are supposed to work. Now, here's a rule of thumb. Remember, the buy-sell line is not a strategy. Just because it closes once above the 50-period moving average doesn't mean, well, I guess I'll go buy it. Steve says have a buyer's perspective. It does not generate buy and sell signals. So what you want to do is look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. So in other words, remember, this is just giving you the perspective. It's just telling you whether you should be a buyer or not, or a seller or not. It does not tell you when to buy, when to sell. It does not generate signals. That's probably the most common mistake new students make. They'll say, well, Steve, I lost money here. Every time we closed below, I sold. Every time we closed above, I bought. That's not the way it works. You still have to add some structure. All it's doing is telling you the overall direction, and then you have to apply some structure in the form of a strategy. Now, remember, this is a great rule of thumb. 3 to 5 bars must close either above or below the buy-sell line before an overall trend is established. So you just can't have one close above. I mean, if you're a more aggressive trader, we have traders who've been trading for a long time, and they say that's all I need because I understand the markets a lot better. But as a beginning student of mine, we always say 3 to 5 closes. For example, in this older chart of big, okay, we're above the 50-period moving average. We start to oscillate above, below, but then what do we have here? A total of 5 closes below. Now, most students say, well, Steve, I mean, that other strategy that I bought, say this is just a pullback. I've got to buy it here. But what is the market telling you? Because it has 5 closes below, there's a good chance that the overall trend is down. And look what happened. It dropped 15 points in the next month. Now, everything doesn't stay on one side of the fence forever. It made a low here, then started to slowly bounce up. Now, as it bounced up, once again, it's almost like a magnet. It'll come to that 50-period moving average line, but it has trouble. It oscillates above and below. So right at this point, there is still no clear-cut sign that the overall trend is up until here. Now, even though we've just gone sideways for the next week or so, what do we have? A total of 1, 2, 3, 4, 5 closes. That's more than enough to tell us that the overall trend is most likely to the upside. And look what happened. The stock jumped 20 points in the next month. Okay? So now you see how you can start applying this simple tool to help your trading, whatever market you're looking at, whatever time frame. For all we care, this could be a 5-minute time frame of big, or it could be a 4-hour time frame of the currency pairs of the British pound. Makes absolutely no difference. So don't worry if you intraday trade or you swing trade and only look at weekly charts. You should always have a 50-period moving average applied, and always ask yourself before your strategy, whatever it is, gives you a signal, ask yourself, what side of the buy-sell line is it on? And you have to be in sync with that. Now, let's go back to the original title of today's presentation, where we ask the question once again, is the overall direction of the market about to change? So let's look at some examples of some indices. The Dow, the spiders, the S&P ETF, it represents the S&P index. And let's look at this chart here of the Dow, as you can see on our platform. Once again, making a nice, steady upward move here. But then it starts to kind of falter, but we're not really going down. We're just kind of going sideways. What's the first thing we do? Apply the 50-period moving average. Now, just to let you know, this is October 1987. Okay? Does anyone remember what happened then? We applied the 50-period moving average, and we're safe to say that we could have applied any buy strategy. But look what happened right here. And this is what happens a lot, and this is where you get your clues. As price starts to come back like a magnet and touch the 50-period moving average, we have a couple of closes below, but then oftentimes it bounces right back up, as you saw right here. But then what happened again? Now we close again even more. 1, 2, 3, 4, 5, 6, 7, 8, 9 closes below. So most students would say, well, Steve, how come it didn't just fall straight out of bed? Well, it doesn't always happen that way. Sometimes the market is trying its best to stay afloat. And so what happened? We bounced right back up here and had a number of more closes, but not enough. Because what happened again? 3 more closes. All right? This was in the beginning of October of 1987 when I was on the trading floor. And then look what happened after that. Okay? Crash of 87 would have been comparable to a one-day market drop of 5,000 points. Now, the crash of 87 was not this. These were the days that led up to the crash of 87. This was the crash of 87, this one day. This was Black Monday. So this would have been comparable to 5,000 points, and all this leading up to it was also roughly about another 5,000 points. So roughly, with the help of the buy-sell line, you could have saved yourself 10,000 Dow points to the downside. That's how powerful this tool is. Let's look at another example. This is the spiders, a weekly chart of the spiders, okay? The ETF that represents the S&P 500. Same thing. Price is above the 50, and then all of a sudden, as a magnet, it comes down and touches, but there's no closes below, so it's still okay, and look what happens. It bounces right back up. But at this point, it doesn't really bounce until it has about 3 closes below. Oh, by the way, this was January 2008. Does that ring a bell with anyone? So now we have roughly about 3 closes below, and look what happened. We have a bounce right back up. You'll see that happen so many times, and oftentimes, it'll recalibrate and say, okay, listen, we had maybe 3 or 5 closes below, but now we have 3 or 5 closes above, so we're back up above, so we're okay again. But in this case, we only had 2 closes above and then right back down again. Okay, so what was the market telling us on a weekly time frame? It's given us a warning signal. It's telling us that the trend is most likely about to change. And we all remember what happened. That was the beginning of the 2008 financial crisis. And you see how there, in both of these instances, I haven't mentioned any powerful indicators. I haven't mentioned any economic news or what's going on with interest rates. That's not needed. There's no reason to overcomplicate your trading because the market was screaming to us in advance it wanted to go lower. So you don't need all of that, information that clouds your thinking. I stopped looking at fundamental news 44 years ago. So if I'm still here, I'm living proof that it really isn't necessary. Now let's look at a more updated, about 2 or 3 years ago. This is the spiders once again. It's a daily chart. Same thing. Price is doing okay. And all of a sudden, we have 1, 2, 3 closes below. Now, look what happened. This time, we didn't even bounce back up until roughly a good 2 months later. And we had 1 close above, not enough to tell us to switch directions, and right back down again. Okay? Now, let's look once again at what happened last year. How did we know in advance? How did our students know in advance that the trend had changed? Well, remember, once again, the market was really doing nicely, very slow. Remember, at the beginning of the year, a year or so ago, it was just slowly trading up. Sure, we'd have this 1 or 2 down, and everyone would say, hey, listen, we broke that. That's support, and it's probably going to get killed, and it would bounce right back up again. But then this happened, all right? Now, someone would say, well, gosh, if we bounce here, we're most likely going to bounce again. All the indicators are oversold. There's no way it can stay this low. It's got to bounce up a bit, all right? That's the way most traders make their distinction. But what is the market telling us? Well, the easiest way to find out is to apply the buy-sell line. Here it is. And what do we have? 1, 2, 3 closes below. So that was a very powerful sign that most likely the trend is going to change. Now, sure, it could have bounced all the way back up here, but we went lower, and now we started to bounce. But look how far away we are from the buy-sell line. And then look how many days. 1, 2, 3, 4, 5, 6, 7, 8 days below. Do you think the market is telling us something? This was our last chance to get out in the beginning of March because we all know what happened after that. So if you were caught being long, or if you lost money trying to buy in March of last year because you thought the market was going to scream to the upside, just think how this simple tool could have helped you. Okay, let's look at the current chart. This is the Dow from March of this year. Here's April, May, coming into June. Once again, just like before, we'll have these short downward moves and everyone says, hey, listen, we broke that support, and it bounces back up again. And it's starting to head lower. And look what happened last week. Now, there was a big clue here from the market, not from interest rates, not from economic indicators, jobless claims, not from Fibonacci support or the institutions, but from the market itself. If we apply the buy-sell line on our platform, click on 50-period simple moving average, what do we have? 1, 2, 3 closes below. Now, a lot of students will say, well, that's all I need, 3 closes below, whereas other students will say, no, Steve, I need at least 5 closes. Well, let's see what happened this past week. We bounced, all right? And we even closed back up above. Is that enough for us to say that, well, we're still in an uptrend? Not really, because look, 1, 2, 3, 4, 5, 6, 7 closes below. Remember I showed you those older charts where we bounce, we have 2 or 3 closes above, then bounce back below, and then 2, 3 closes above, and then bounce back below? This may be happening. So for right now, you can ask yourself, is the market, the overall market, about to change its direction? I think you have the tools, the information to make that decision for yourself. Now, if by chance we happen to close 3 times, 3 to 5 times above, well, then you'll be able to make that distinction as to the market changing direction or not. But you have the tools and the information to make that decision now. Remember, you should never ask the question, is the overall direction of the market about to change, from someone else, when you have the information right there. Our goal is to give you this information, this education, so that you'll never have to ask anyone. You can make your own decisions. Remember, as I said at the beginning of the presentation, the reason why most traders fail is because you're always taught to ask someone or something else what to do. All right, that can be a system, a $10,000 system you bought that automatically does all the work for you. It can be every day going to a blog or listening to the guys on TV and find out what they like or don't like. It could be subscribing to a trading room or a chat room, finding out what everyone is buying and selling. This is the way we've all been trained, myself included. And this is why, in our opinion, why most traders fail. You have to get to the point where you're able to answer the questions yourself. And once you feel confident about that, you stop going to the trading rooms. You stop reading the blogs. You stop listening to economic earnings and indicators. You stop watching the guys on TV because you say, why do I need that for? Those guys are almost always wrong. I can make my own decisions and I'm doing better by doing that, okay? This is our goal as an educator. We'll never tell you what we think or what you should do. We'll only teach you so that you can make those decisions. Okay, now I have a homework assignment for you. I want you to go back and research your last 10 to 20 trades, regardless of what market or time frame you trade. I can almost guarantee that your losses were due to the fact that you were out of sync with the buy-sell line. That's how powerful this tool is. You all have access to it right now. Any platform has the ability to generate a 50-period simple moving average, okay? So let's recap real quickly. First thing I want you to do is apply the buy-sell line, all right? Remember, this is not a strategy. It's not a system. It only gives you the perspective or the bias that you should be having. In other words, if price is above, then it's telling you to have a buyer's perspective. If price is below, you should have a seller's perspective. And remember, it's simply the 50-period simple moving average. That's all it is. I know a lot of students say, well, gosh, Steve, I always look for 50 along with a 30, along with a 10 to cross. Don't overcomplicate things. I just have a 50-period moving average on my chart. That's all I use. So just keep it simple. And lastly, before your strategy, I should say you pull the trigger, before you buy or sell a strategy signal, ask yourself, where is price, current price that your strategy is based on, where is it in relation to that buy-sell line? So you should never just blindly buy or sell. Always ask yourself, am I in sync with the buy-sell line? That's what will give you added consistency. All right. Now, we want to thank you all for attending today. So we're going to give you a great discount with a lot of great bonuses for a really discounted offer here. This is our boot camp course where we talk about trend trading, but we take it to the max. You're going to get instant course access to this. We're going to talk about entries, exits, and stops. We're going to talk about trading aggressively as well as conservatively. You're going to get all the complete course rules and what it means to trade in sync with the trend. We just shared with you one of those techniques today, which is one of the most powerful, using the buy-sell line. But there are a lot of different ways to find the short-term, the intermediate-term trend, and how to be in sync with it. This is all included in our boot camp course. But we're going to take it up a notch as well. We're also going to include the rules to strategy number 1. Now, this is one of our most consistent pullback methods. A pullback method likes to buy at lower levels in an overall uptrend. And it also likes to sell short at higher levels in an overall downtrend. So you're going to get all the complete strategy 1 rules. This is a great method. Also, you can trade it aggressively as well as conservatively. Let me show you an older example here. Most traders would look at this example here in the spiders that the market was in a downtrend, right? You say, well, Steve, you say to, look to sell in a downtrend. But according to the rules of strategy number 1, this was actually a pullback. And the buy signal was generated right at that very low, and the market quickly went up 8 points in the next week. Now, some students would say, well, Steve, with today's volatility, 8 points isn't a lot. But guess what? That transferred over onto nearly 700 Dow Jones points. Because remember, the spiders represents the S&P 500. So you could use this for a market directional tool as well. You're going to get all the complete course rules, and you're going to learn how to trade this as well. It's a great, great strategy. But we're not going to stop there. We're also going to throw in some extra bonuses. In fact, a total of 12 altogether. You're going to obviously get our bootcamp online course. You'll get strategy number 1, but you'll also get our entries, our exits, and our stop placement course. You'll get our buy-sell line scanner. You'll get the top-bottom 25% strength scanner. This is another tool for determining the short-term trend. All these things, anywhere from scanners to multi-scanners one-click auto entries and exit tool. And here's the best thing about this, bonus number 12. You'll be able to get 6 months of the PTS Primo Charting Platform. Okay, now this is a nearly $900 value. Now, obviously, you're going to get all these things and more. There's just too many things to mention on our platform. There's a lot of great features like strength of trend tool, all the proprietary exit levels, as well as personalized tech support. But look at this. This is the best thing, I think, for what we just went over today. You're going to get 4 different buy-sell line features. This is a great addition because we know that a lot of students, when they first take our courses, they're really enamored with applying the 50-period moving average as the buy-sell line. But after a while, they'll say, well, gosh, Steve, it's kind of boring, it's kind of slow, and I went to that other webinar, and this guy promised me that I would, retire in 3 to 4 months, so I kind of forgot about it. So we wanted to make it so that you wouldn't be able to forget about the importance of the buy-sell line. So I'm going to toggle over onto live charts here. This is our actual platform. And remember, we looked at this chart earlier. This is the Dow. This is the current chart of the Dow. Here's how you can use all these different 4 features. You click on the buy-sell line, and obviously you can use the 50-period moving average, okay? This is what we showed you earlier. But if that gets to be too simple for you, you could also use our background feature. Now, what this does, it paints the background. If you have price above the 50-period moving average, the background is always going to be blue. So you just automatically know if you have a blue background, you should have a buyer's perspective. And look what we have here, 1, 2, 3, 4, 5, 6, 7 closes here. Now this is where we had a seller's perspective. Now, even though we're back in the blue, this is only for 1 day. Remember, we need at least 3 to 5 closes in the blue. So for all we know, we could have a couple of closes in the blue and then right back down to red. So this is another great feature that our students love that makes it simple for you not to forget to use the buy-sell line. We also have our color ribbon. If you don't want to clog up your screen, well, look at the bottom of the screen there. That tells you where price is in relation to the buy-sell line. As you see, price is above all of that blue area, and then there's a small section here in red where it was below the 50 period. But here's the most popular as well as simplest one to apply. We're proud of this. You won't find it anywhere else. This is our fluid feature. And this is simply the buy-sell line, but everything above the buy-sell line is blue, everything below is reddish-orange. So now you can see with this color how it looks. And this is just a great way to trade it. It's the 50-period moving average, but with also the background feature. So you can see a couple of closes here, and then you'll know right away if we close below. So this is just a great way to always be reminded of using the 50-period moving average, and you don't have to always click it on. It's always there for you in the terms of the color of the screen, okay? So as I go back to the presentation, this is all included with these extra bonuses, okay? Remember, you're going to get 6 months of our platform. And normally that would cost you close to $900, totally free. So let's break this all down, okay? You're going to get our boot camp course. It tells you all the different ways to trade and be in sync with the trend. You're also going to get our strategy number 1 online course. You'll be able to get all the rules. You'll be able to learn exactly how to enter, exit, place your stops, trade aggressively and conservatively. You're also going to get all those extra bonuses included with 6 months of the platform. This is all included in price. Now, normally, if you purchase all these things separately, it's going to cost you close to $8,400, okay? Now, we're not like other sites. We would never charge you that much, especially on a Saturday morning when we're trying to get ourselves introduced to you. So here's the great discount we have. We're going to cut that price tremendously for a limited time, today only, for only $297. Less than $300, you can save over $8,100. And remember, you're getting over 40 years, over 4 decades of experience of things that I've accumulated right there at your fingertips. This is a great way to take your trading to the next level. A year from today, you will have wished you became a member of these courses. Start trading in the right direction. Remember, the only reason why you lose money is not because you have a faulty strategy, or it's not because you don't have enough experience, it's not because you aren't that good of a trader. It's because you're out of sync with whatever the market wants to do. Think of it. When you buy and the market goes lower, it's because you're out of sync. If you sell and the market goes higher, it's because you're out of sync. If you learn how to be in sync by listening to the market and not these outdated traditional ways of looking at the market, then your trading starts to become consistent. So learn how to trade in the right direction. Here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. They developed a platform with me. They also are in charge of all the discounts and all the tech support. You can contact them by either emailing them at trading@protraderstrategies.com, or I would suggest calling them directly at area code 310-598-6677. They have trading consultants manning the phones right now that would be more than happy to either answer questions about pricing or about tech support, or they would take your order over the phone for $297. Okay. Now, if you'd like to do it on your own, that link you see at the very bottom will take you to the sign-up page and also the information page of what we talked about today, the Great Saturday Offer. Now, it's not a live link because you have to copy and paste that, but on our chat box, they've posted a live link there. So if you go to the chat box on the GoToWebinar column on the far right, you'll see a link right there. Just click that on, and it will open up that information page, okay? Now, I promised you I would leave all this information up here and answer any questions. So if you do have questions and you waited till the very end, now is the time to ask. Simply go to your question and answer box, type them in, and I will answer them to the best of my ability, okay? Okay, someone's asking about the buy-sell line. They said, can we use a different moving average? This is probably one of the most common questions I get after I teach this course. Yes, but please remember, the buy-sell line is not something that's magic. It's not a magic number or a magic moving average you have to use. It's simply a tool that really I want to instill the concept of asking that question. Where is price in relation to that? Sure, some students like to use an exponential moving average. Other students like to use a 100-period moving average. You know, you can experiment. In fact, we encourage you to experiment with that. The main thing is I have done all of that already. I've used different weighted moving averages, different variable moving average. I've used different time frames. And in my 4 decades of trading, the one setting that seems to work the best in all markets and in all time frames is the 50-period moving average. So just know this going in. If you use a smaller time, such as a 10-period or a 20-period, that will work better on shorter term time frames like intraday trading. If you use a longer one like 100 or 200, that will work much better if you're investing or swing trading. But the best bang for your buck is a 50 because that transfers over onto all time frames, all markets. So that's my suggestion. But feel free to experiment. Most likely, after you've experimented enough, you'll come back to the 50-period moving average, okay? Next question, can you someone's asking about educational correspondence. They're saying, do we get your personal email with this? Yes. I've often stated in my courses that I'll hand out my personal email, so if you have any questions, and I think what this person is asking is that only for strategies? No, I mean, this today, we're teaching you about trend, and that's just as important as anything else. So yes, you will all get my personal email address. If you have any questions, you can always email me. I'll answer questions. In fact, after we conclude today's presentation, I'm going to be answering some students' emails that are across the world in different time zones and different countries. So yes, I answer them as soon as possible. All right. Okay, no other questions? As we conclude here, remember, I would strongly recommend calling Pro Trader Strategies right now at 310-598-6677. There's absolutely no obligation. They're not going to try and sell you anything. They'll answer your questions. But if you do want to take advantage of that very, very discounted price, over $8,100 discount, feel free to sign up online, or I should say over the phone with them. They'd be happy to take your order, and you can be up and running as early as today. You can get all that information right away, okay? So as we conclude here, let's take one last look at our disclaimer. And I just want to say thanks for taking time out of your Saturday morning. I hope you learned something. I hope you see our attention to detail and really trying to educate you. We're not just trying to sell you something. As you can see, we dropped our price tremendously, and I also taught you something. So we really want to educate you. That's really our goal. And most importantly, give Pro Trader Strategies a call. They can take your order right over the phone, answer any questions. Once again, thank you so much for attending today, and I really appreciate taking time out of your Saturday morning. I wish you the best of luck and look forward to you all becoming students of mine in the Bootcamp Trend Trading course. Thank you so much. Have a great day. I'll see you next time. Bye-bye.